the board of directors is important for the internal control of an organization or a company. So what do you think? Do you have any idea? Because this state, the process is effected by the entity's board of directors, management, and other personnel. Because if the board of directors doesn't support the audit committee, do you think the audit committee can work well? No, it's impossible. So need the support of the board of directors. That's why it's effected by that board. Okay, and the process is designed to provide, as we said, reasonable assurance. Remember, only reasonable assurance is provided. And it is regarding the achievement of entities' objectives. And these objectives are relating to effectiveness of efficiency of operations. So internal control is highly related to the internal operations of the company. Okay, and internal and external reporting, because everything we do is for the reporting, right? And the compliance with those and regulations. So there are all the keywords related to internal control definition. Okay. Okay, next. Yeah. And what is emphasized by that definition? This is another summary for the definition. This page talks about audit committee. And do you still remember? Audit committee is appointed by the board, right? That is why the board is important. Okay, and is composed of between 3 to 7 board directors. I think this is mentioned in the previous chapter. And okay, between 3 to 7 board directors, and they are not part of the corporation's management. Okay, and their responsibility is to help independent auditors oversee the corporation's financial reporting system in a process independent of management. So independence is an important word for this part. So this is one emphasis. And the second one is an active and objective internal audit function in preventing fraudulent practices. And this is the purpose to have the internal control systems. I think you all be able to summarize this. I think your English is quite enough, so you can summarize it. Okay, so next page. Okay. Okay, and the second page. Okay. Reasonable assurance. I know you all know this because the purpose is you have to make sure the cost shouldn't exceed the profit, the benefits. Okay, that is the purpose. You can only provide the limited or reasonable assurance because you have to make sure the cost will not exceed the benefits. And because we are business, right? Yeah, we are doing business. Yeah, even auditing is a kind of business. Okay. And the control objectives are similar to management assertions. Do you still remember the management assertions? Do you remember what are they? What is the first one? Remember? No. I think next page. See? Yeah, here. Remember this one? And this one is provided by PCAOB. And do you still remember PCAOB? Yes, okay. They are very, very extremely important. So you have to memorize all the assertions, okay? So the first one is existence or occurrence. And the second, the rights and obligations. And the next one, completeness, a cutoff, valuation, allocation, and accuracy. The last one is presentation and disclosures. They are all related to the reporting of financial statements. And they are the objectives that auditors have to make sure after they conduct the audit processes, they can achieve the objectives. You have to memorize this one. Yeah, this is the only part that I can remember after 10 years without touching auditing. Yeah. Okay, so let's go back to the previous. Okay, and this control system, they also have the objectives. And the objectives of the internal control are very similar to the management assertions, but are broader in the control objective, because the control objectives not only related to financial reporting, but also to operations and compliance. So for financial reporting, the key objective is to make sure that management assertions have achieved. But for internal controls are also related to the internal operations and whether the companies are compliant with all the regulations or those or any rules. So it's broader, right? So management assertions are only related to the financial reporting, but the objective of internal controls are related not only to financial reporting, but also to operations and compliance. Okay, so 3 parts. The first one is financial reporting. That is the key concern of management assertions. Okay, and the second one, operations, and the third one, compliance, are also related to the internal controls. Understand? Yeah. Okay, next page. Okay, next page is this page. And here are the control objectives. Okay, and control objectives comprises 2 parts. And the first one is the major objective. The second one is the sub-objectives. Okay, let's take the area of reporting as an example. For area of reporting, the top or the first or the major level objective is to prepare and issue reliable financial information. So this is the major objective. And that under that objective, we have some sub-objectives. Like you have to make sure, let's take accounts receivable as an example. Like when you are auditing, accounts receivable, you have to make sure all goods shipped are accurately billed in the proper period. So see that they are quite similar to the management assertions. See the second one, invoices are accurately recorded for all authorized shipments and only for such shipments. And then authorization and then completeness and accuracy. But see, accounts receivable record are safeguarded. So quite similar to the management assertions. And these are the sub-objectives of for the under that top level objective. And except for the reporting, you still have to remember there are another 2 areas for internal control, operations, and compliance. So 3 parts, 3 areas of concerns. Okay, next one. Okay, so what is COSO? Okay, because our definition is based upon the COSO framework, but the Committee of Sponsoring Organizations. Okay, and they include AICPA, as you know, AICPA, quite famous, okay? And then AAA, what is AAA? American Accounting Association, okay? American Accounting Association, and the Financial Executives Institute, the Institute of Internal Auditors, and the Institute of Management Accounts. Everything related to accounting is involved in that organization. Okay, so that is why a very powerful organization. Okay, and this COSO is also known as the Treatway Commission. Do you know the word treatway? You can check in your own language, treatway. TREADWAY. That is the last name. Yeah, but also has his meaning. Okay, just make sure you know what it means in your own language. Okay, and this COSO is also known as Treatway Commission because its original chairman is James Treatway. So that is the story. Yeah. So that word is the last name. When I saw that word, because I know its meaning. But after I read this story, I think that quite interesting because that word is the last name. Yeah. So this is COSO, okay? Okay, and we have to know when we are talking about the internal control, we have to know this act. This is the Foreign Corrupt Practices Act. The act was passed in 1977 in response to American corporations' practice of paying bribes. And do you know bribes and kickbacks? I think they are very popular in my country and your country. I think also very popular in your country. Yeah, bribes and kickbacks. So you have to know these two words. So if you don't know, just check. Yeah. Okay. So it was passed in 1977 in response to American corporation practice of paying bribes and kickbacks to officials in foreign countries. Okay, and the purpose is to obtain business. They are paying money to the government of a foreign country or the top managers of that companies in foreign countries. So that is called the bribes and the kickbacks. And this act was passed to prevent that kind of act. Okay, and the act makes illegal payments of bribes to foreign officials. That is illegal in the United States after 1977. And this is called anti-bribery law. And the second one is it requires an effective system of internal controls, but that only applies to public companies to prevent top management from asserting that they were not aware of the illegal payment. They cannot say they don't know. Okay, the public companies has to set up the internal control system to prevent that if these things happen, the top management cannot say, I don't know. They cannot say, I don't know, to prevent the punishment. So this is called the internal control provision. So the two major things within the act, one is the anti-bribery, and the second one is the internal control provision. So that is very important for the history in the United States in auditing. So what's your opinion about bribe while doing business? Do you think it's acceptable? No? Okay. But sometimes it works. Yeah, sometimes it works. Yeah. Okay, next one. Okay, so next object, we are going to get to the 5 components of internal control. Okay, so these 5, the first one is the control environment, and the second one is the risk assessment. The third one is control activities, and then information system. The last one is the monitoring activities. Okay, and we will talk about that one by one. Okay, so do you want to take a rest right now? Then we come back to finish the 5 components. Yes? Okay, so the first component is a control environment. Okay, the first component is control environment. And here are the basic principles. Okay, so the first is the management commitment to integrity and ethical values. I think that is the most important one. Yeah, okay, so the commitment for the management to integrity and ethical values. And the second thing, okay, anyone? Okay, no. Okay, so the second thing is an effective board of directors, as we said in the previous pages. Okay, and the board of directors demonstrates independence from management and exercises oversight of internal control. That is the responsibility of the board. And the audit committee is to be responsible for the coordination and oversight of the work of CPAs. So see, the audit committee is to oversight of the work of CPAs, and the board of directors are exercising oversight of internal control. So the two committees are also very important. They are helping each other. Okay. And the third one is to establish the effective structure. Okay, and the structure include reporting lines and separate authorities and responsibilities. And for separate responsibilities, you have to make sure the three functions should be separated. Okay, the first one is authorization of transactions, and the second one is record keeping for transactions, and the third one is the custody of assets. So authorization and then recording, and the third one is custody. They should be separated. The three functions should not be in the same hand of a person. But sometimes it's not easy because for small companies, not so many people to share the responsibilities. Okay, so the next one, also the basic principles. Okay, so the first one is the commitment to attract, develop, and retain competent employees. I think this one is how to say that? They are as important as the first one, commitment to integrity. For this one, yeah. So for this one to be effective, the company should have an effective human resource policies. Yeah, because these policies can mitigate the other weakness in the control environment. Okay, and the last one is to hold employees accountable for internal control responsibilities. They should be held responsible for the responsibilities. Okay, and the expectations should be made clear to employees, and the deviations from internal controls should be thoroughly investigated. So see, when you are hiring a person, you have to let the person know what his responsibilities are. Very clear. So we have a job description, right? So when you are looking for a job, you have to check their job list. How to say that? Responsibilities description, right? Or duties description, and you have to check those duties and the responsibilities are what you want. If they are what you want, then you can go ahead and apply for the job. If they are not, then you no need to apply for the job because you don't like it. And for those duties and responsibilities, that's what you will be held responsible for. Yeah. I think that's a job description, right? Job description, including responsibilities and duties. Yeah. Okay, so this is the basic principle for a control environment. Okay, so yeah, come to our exercise time. Okay, so we know we should segregate the duties and the responsibilities, and at the two most important departments within a company for auditing, I think they are accounting department and the finance department. Okay, so I would like you to search online, maybe in your own language, to classify the duties and the responsibilities of finance department and the accounting department. And then the next one is to identify the control activities to be implemented for monitoring whether the duties and the responsibilities of these two departments has been properly segregated. So you have to know very clearly what the accounting department should do and what the finance department should do. Yeah. Okay, so I think it's quite easy. So 10 minutes? Yeah, 10 minutes, okay? 15? 10 to 15. Okay, so here is the summary for the key roles of accounting department. I think it's quite easy to be understand. The role including money out, making payments, and keeping the bills paid. One function. And the second one, money in, processing incoming payments. And the third one is payroll, make sure everybody gets paid. Okay, and then reporting, preparing the financial reports. Okay, and the last one is financial controls to avoid errors, fraud, and theft. I think they are quite easy, right? And easy to understand. Yeah, this is the key roles for accounting department. And I found this in the website. The source there. There are so many things in the website. Yeah, so you can, if you have time, have a read it. Okay. And this is the key roles for finance department. See, the first one, management of capital sources. Okay, and the second one is make sure the relations with the providers of funds. The keyword is funds, because when the company needs money, that's the finance manager has to worry about. Okay. And the last one is manage strategic projects, like if they want to merge another company, something like that. So that are the keys for the finance department. I think they are also the difference between accounting department within the university and the finance department. See, we are at the accounting department. So our key roles are make sure the process for money out, money in, payroll reporting, and financial controls are working properly. But for finance department, they have to worry about the capital budgeting, right? The capital management and strategic financial management to make sure the company can get enough fund for expansion. Yeah. So they are the key difference. So for small companies, usually the function are put together for small companies. Only big companies will have accounting department and the finance department. Yeah. Okay, so I think you got a better understanding for the difference between the two departments. Yeah. And because last week I went to high school to have a speech on the difference between accounting department and the finance department. If you will do the job, what will you say? What will you say? Because the high school student, they don't know the difference between accounting department and the finance department when they are choosing which department to go in the uni. That is the big question for them. So what will you say to make them understand which department is right for them? What will you say? So what will you say? Yeah. Maybe you can ask yourself, why do you choose accounting department? Why don't you go to we have a finance department, right? In the school, yeah. So why don't you choose that? Why don't you choose the finance department? Or we can call financial management, the Department of Financial Management. So if you know the difference between the difference of these two departments within a company, then I think you should know the difference between the two departments in the unit. Yeah. So see, financial management, I think that is a required course for the Department of Finance. But usually that is not a requirement for us in accounting department. financial management, or we can call it strategic financial management. Okay. Okay. Oh, 5 to 11. Okay. Here is the case on our textbook, talking about the importance of organizational structure. So if you have time, have a read. Okay, that's on page 283. Okay, if you have time, have a read. Okay, so let's move to the next component is risk assessment. I think that's quite similar to while we are talking about the control risk. Quite similar, so I will skip this one because I don't think we have enough time to cover every PPT. Okay, so the most important thing for risk assessment is to over there. Effective risk management requires the establishment of performance measures to assess the achievement of objectives. So you have to compare the performance and the actual results to better management of the risk. Okay. After I finish the lesson, I will give you the updated PPT. Okay. And the next one is control activity. They are very important for actual. When you go out to audit, this is very important. Okay, control activities. Okay, so control activities include the policies and procedures. Okay, the policies and the procedures. Okay, and control activities include the following. The first one is performance review. You will compare budget, forecast, the prior period performance. So that is performance reviews. And the second one for transaction control activities that include general or specific authorization. And every document should be in serial numbers. That is very easy, but very, very important control function. Every document should be serially numbered. So if there is one missing, you will know. Yeah, for every document, serially numbered. Okay. And physical controls like inventory, so physical custody over records and assets, that is very important for the asset part, and segregation of duties. That's why you have to understand the company's structure. Okay, because you have to know the function for record the transaction and the function for custody of the asset should be separated. Okay. Okay, this is a control activity. And then, okay, see, this is the most important for the segregation of duties. See, for custody of assets and for the record should be separated. So the cashier should be separated from accountants, right? The cashier keep the money, the accountant record the transactions, right? Okay, and next one is information system. Okay, and this is the objectives of accounting system. I think you can read this by yourself, not hard to understand. And this is the controls over accounting estimates. Okay, and this is the classification of controls over financial reporting. There are 3 different categories. Okay, all the controls. The purpose of the controls, one is for prevention of the possible misstatements. Okay, and some are detective and some are corrective. So they are within different stages. Okay, so if you, I think preventive is the most important. Yeah, if you do everything right in the first place, then will reduce the further work you have to do, right? Do the right thing in the first place. Okay, so preventive. Okay, so for like segregation of duties is for prevention, right? And then for see like so the company's money is kept in the bank, right? And you have the bank record, and you also have the money in hand. So you have to check the money in hand is the same as the statement from the bank. So you have to check that is monthly bank reconciliations. You have to check, right? Okay. And for corrective, like example is backups of master file used to reconstruct incorrect record. Okay. Okay, and okay, the last one is monitoring activities. Okay, so I think this one you can read this by yourself. This is the limitations of internal control.